Hey guys, welcome to the channel. Welcome back to another video. On today's quick video, I want to have a conversation about something that I think is important. On today's video, we're going to talk about our live video today. We're going to talk about what's happening in the tech world in terms of stocks and why it's happening. Kind of an urgent warning or major warning regarding the stock market for average investors, beginning investors, even some seasoned investors. So I really want you guys to pay attention to what we're talking about today. And so, hey, let's get her going. As you come in, let me know where you're coming in from, what city, what state, what county, what country, you name it. Let me know where you're at. And good evening to you. And give me a thumbs up if you can hear me. I appreciate you being here on Facebook. I appreciate you being here on Instagram and YouTube, all over the place. Now, I'm going to be sharing my screen quite a bit on this quick video, guys. So pay it. So if you want to come on over and see my screen, if you're not able to see it, go on over to Smart Money Bro on YouTube and you can check it out. Willie Wallow, good to have you. Thank you for the thumbs up. Phoenix, Arizona's in the house. Brian, good to have you as well. Appreciate you. And by the way, Willie Wallow is from Maple Shade, New Jersey. New Jersey. So glad that you're here. Let's actually start this one off here, guys. And let me just say this. I want to kind of preface this with a few things. First of all, this is for investors, right? If you're new to investing, haven't invested, never invested, want to invest, you're thinking about investing, this is good for you. This is going to be some good education that we all need and could use. There's going to be a shift or what's called a rotation out of a certain sector. And I think it's coming out of the tech sector and it's really already starting, right? And my point is you have to get ready for it and be prepared for it as a person who may have recently bought a lot of Nvidia or Broadcom, AVGO, or whatever you bought. You got to get ready for this rotation that's coming, right? Nvidia stock is losing some steam along with other tech stocks. And I want to explain on this video exactly what is happening and what's happened in the last 24 hours. Now, all is not lost when this happens, guys. Keep this in mind. We are investors and we don't invest with emotion, right? We lead our investing with rational thinking, right? So when others panic, right, we buckle down and get a little greedy, or we keep dollar cost averaging, right? So the four things that I look at, let me say this up front. Four things I look at when I'm digging into individual stocks is, are there any stock splits coming up? Is there big news, but the company has good fundamentals? Or is there bad news and the company has good fundamentals, right? And then, of course, we look for a little asymmetry and all that. We'll get into that a little bit later. Of course, there's other stuff like moats, earnings reports, which I mentioned a couple of days ago, are coming up for a lot of companies. The management style, my core values, my risk tolerance, all that stuff is involved. But I look for big news, bad news, stock splits, and things like that, right? Part of my strategy. So we're going to dig in and talk about Nvidia and some other big tech stocks, and then talk about what's going on with Taiwan. Huge Taiwan. And then we'll talk about some rotation, which is the word for the day, right? Rotation, rotation, rotation. Rotation into other types of sectors of stocks other than tech, right? Could be rotation into some value stocks, rotation into small caps and mid caps, right? Those things that have been down traditionally over the last 6, 7, 8, 10 years, right? So thank you for being here. Let's see who we got in the chat here, guys, as we get going. Money Making Mike is from Fresno. Good to have you. We got Sonia, however you pronounce it, from ATL, Atlanta. We got, let's see here, Marika. Good to have you. The market is cycling to small cap. You're right. We're going to talk about that. Somebody said just another reason to buy the entire market. I like that strategy. Pistol Pete's in Minneapolis. Mr. Zed Blade is in Morristown, New Jersey. Winnipeg, Canada's in here. Nigel, glad to have you. Thank you for being here. Chi-Town, Chicago's here. Good. Beaumont, Texas in here. Awesome, right? Gary's an ETF guy. Perfect. TSMC took a nosedive, but I'm watching it now. Yes, many of your tech stocks took a nosedive, right? A lot of them. Skywalk is from Utah. We got, somebody said bought a couple more Nvidia at 117. Hey, we're investors. When the market goes down or the sector goes down, we don't go running, right? We either dollar cost average or dig in for more, right? So let's see here. Robert, good to have you here. Robert, Sunset on the Ocean's here. Good to have you here. St. Lucia's in here. Glad to have you as well. So let me share my screen real quick and let's kind of dig in and look at where NVIDIA is right now, if I can find it. Because I want to have this conversation, but I want to explain to you not only what happened to these stocks, but why it happened, right? And that goes a little bit deeper. And I want to have the conversation in sort of plain language, right? So we don't be talking over people's head over here on this channel. We keep it real simple. We don't try to overcomplicate anything. That's where Nvidia is. Let me refresh my screen, see where we're at. Closed at 117.97. 117.97. Over the 5 day, as you can see, this is a 5 day chart right here. You can see it 5 days ago, Nvidia was at 136. Now it's all the way down to 117, right? So that's a nice little drop, right? For investors, that may be a thumbs up because we already have talked about the fundamentals of Nvidia, right? The only thing that we're concerned about at this point, if there's any concern as an investor and seeing the stock dip, is what are the reasons? What's going on that's souring larger investors and larger retail investors from tech stocks and Nvidia itself, right? Of course, if we look at the let's go year over year, right? This time last year, relatively speaking, because there was a split, it was around 46 bucks. It's still up to 117, guys. So let's not act like it's had a bad year. It's had a bad 5 days or so, which is again not a bad thing if as an investor, right? Not a bad thing as an investor. So but why is it happen? Not just with Nvidia, right? Not just with Nvidia. We can go over here and pull up. We can look at their. Let's look at another one. Let's look at TSMC or TSMC. Let's look at Broadcom. Broadcom. I got Broadcom up right here. So same thing. Look at Broadcom. See where it's. Let's refresh. Make sure we're good for the day. Perfect. 5 day run again. Look at that. Boom. 5 days ago, we started at 176. Now we're down to 157, almost a $20 dip, right? Per share, right? For Broadcom trading at ticker symbol AVGO. So we have that, excuse me, we got that. And I could go through the list of them, right? AMD, well, I think AMD might have done pretty good. Let me pull up AMD while I'm sitting here. That's okay. You guys don't mind? AMD for the 5 day. Yep, lots of things took a nosedive, right? Let's try TSM, Taiwan Semiconductor. And we're going to talk about Taiwan because this is a part of the reason of what's going on here with these tech stocks. All right. A part of the reason. So as we see, took a dive in the last 5 days as well, month over month. A little rocky this month, but still trading lower right now than it's traded in a few weeks or so. But this is what we're seeing across the board for these technology stocks, right? We're seeing this. So let's dig into Taiwan for a second first, okay? I think I read it was 1987 or 88 where you had Taiwan or TSMC founding its first what they call a foundry, which is where they make semiconductors, right? So Taiwan is the leader in the global semiconductor industry. The country of Taiwan, due to what the skilled workforce, strong supply chain, you name it, government support, although there's been some rift and some issues with China. But Taiwan Semiconductor Manufacturing Company, TSMC, right, that I talked about just a couple of days ago, it's been around for a long time. But what Taiwan did back in the late 80s, early 90s is Taiwan became the epicenter of semiconductors, right? The epicenter of semiconductor, right? So it's the place that is very, very important for really the rest of the world to run off of computers, iPhones, you name it, right? They've got a large workforce that's engineering, that is computer engineering, that is Taiwan is a major player in the AI space. They're a major player in the technology space, right? So they've kind of got, you know, how there's certain countries that kind of get a large chunk of an industry like a Saudi Arabia might have in the oil industry, or Taiwan has been that place for manufacturing complex semiconductors, right? And they do a ton of research and development in that area. That's what they do, right? So let me see if I can't pull up another one real quick. I'm going to pull up another, just to kind of, guys, bear with me. I like to kind of pull up some recent articles so we can kind of just look through them and kind of see what's happening in terms of the topic. So let's see here. Let me pull this one up real quick. Here it is right here. Good. Perfect. All right. Global chip stocks from Nvidia to ASML fall on geopolitics and Trump comments, right? So this is our article actually written today, and I think you guys can see it. Let's see. Yep, you can see it. And I'll just kind of paraphrase a little bit of it for you. So, global chip stocks fell sharply, with ASML, Nvidia, and TSMC posting declines amid reports of a tighter export restriction from the U.S. and a ramp up of geopolitical tension, fueled by comments by both Trump, really comments by both Trump and Biden recently, right? And it says ASML Netherlands listed shares were down 11%, while Tokyo Electron shares in Japan closed at nearly 7.5% lower. And it goes on to say the moves came after Bloomberg on Wednesday reported that the Biden administration is considering a wide sweeping rule to clamp down on companies exporting their critical chip making equipment to China. So Taiwan ships, manufactures, and ships semiconductors, you know, in their top two foundries and their companies all over the world. And Biden has stepped in and said, you know what, we're considering clamping down on companies exporting chip making equipment out to China. Washington's foreign direct product rule of FDPR allows the U.S. to put controls on foreign made products, even if they use the smallest amount of American technology. This can affect non US companies like TSMC, right? So CNBC has reached out to the U.S. State Department, the Bureau of Industry and Security, and the Office of U.S. Trade Representative for comment. ASML stock drop came even as it reported earnings that beat the market. So it had good, solid earnings, right, for the second quarter, but they've still seen a drop recently. Let me get out of this one real quick, and let me actually close that one up. And let me pull up one more just to kind of hone in on this real quick off Yahoo. Just trying to give you guys a reason. There's a couple of reasons, but I want to give you the reasons why we've seen tech stocks go down, including Nvidia. Okay, including Nvidia. Let's see here. So I'm going to give you a bunch of information, but that's what I'm trying to do here is just kind of load you up with information so you can make good, solid investing decisions. Chip stocks shed over $500 billion in value on China trade fears. Let's see. This one was written actually today, I believe. Yep, today. Wall Street Semiconductor Index lost more than $500 billion in stock market value on Wednesday in its worst session since 2020 after a report said the U.S. was mulling tighter curbs on exports of advanced semiconductor technology to China. In other words, America is trying to tighten the belt on China, right? And how do we do that? We add tariffs and so forth on semiconductor chips going from one company in Taiwan over to China. Sounds odd, I know, but this is how the world works, right? Remarks from Republican presidential nominee Donald Trump said key production hub Taiwan should pay the U.S. for its deepened selling in chip stocks. In other words, America helps defend Taiwan against who? Does anybody know who America is protecting Taiwan from? Who is America protecting or offering protection and providing protection from? This is the key. This is the key right here. Who is America protecting Taiwan from? I've asked that 3 questions. I'm gonna shut up now, right? But this is what we got to know. You have to be thinking about when you're investing, you have to be thinking about some of these geopolitical things that are happening. So America protects Taiwan from China because China wants Taiwan to be a part of China. Actually, Taiwan is considered by the Chinese to be a part of China, right? There's tension between China and Taiwan, and America helps protect Taiwan. So I hope you guys can see my screen. Let's see here. Nope, you can't see my screen. You got it on the screen. But this is why Donald Trump, the nominee, Republican nominee for president, said that the U.S. that Taiwan should pay the U.S. for how we help defend them against China, right? And so there's some tension here that's boiling over. Keep reading here. Let's see here. The latest worries for chip investors come after Washington in recent years has adopted a more protective stance for the U.S. semiconductor manufacturing industry. So America wants to protect Taiwan because Taiwan produces so many semiconductors, and those semiconductors help run America, help run most of the world. And so if they don't, America does not want China to have full, complete control of Taiwan because then America's computer systems will be at the whim of China. It says the U.S., and I'll just keep reading. U.S. told allies it is considering using the most severe trade curbs available if companies continue giving China access to advanced semiconductor technology. The U.S. listed shares of Dutch chip making equipment provider ASML holding slumped 13%. So this is what we got to understand is happening. Oh, down low. I'll keep reading real quick because I want to bring up this point. President Joe Biden's administration has moved aggressively to curb Chinese access to cutting edge chip technology, including sweeping restrictions issued in October to limit the export of AI processors designed by firms including Nvidia. The curbs have dented U.S. chip makers' sales to China, right? If you work for the federal government and you do contracting, you understand that this is really a big deal, right? Which is what I do. So this affects a lot of places, but America has been trying to reduce its business with China, and this is all part of it. Nvidia's revenue from China stood at about 18% of its total revenue in the quarter ended just recently, compared with 66% a year ago. So Nvidia is having to do less and less business with China. Trump, seeking to regain presidency in the November election, told Bloomberg Business that Taiwan should pay the U.S., like I said earlier, for its defense, as it does not give the country anything. That sent U.S. listed shares of Taiwan's TSMC, the world's largest contract chip maker, down 8% today. Right? That's huge. That's big. Then it goes on to talk about how maybe Intel could benefit from some of this. Intel has been investing heavily to restore a manufacturing edge that it lost to TSMC. So TSMC loses a little bit. Intel may go up a little bit. They're competing, right? Several policy experts said the U.S. focus on semiconductors will likely continue even if Trump returns into the presidency, with potentially more curbs on exports to China and support for domestic chip makers such as Intel. So domestic chip makers could benefit, but at the same time, TSMC could lose, which is a Taiwanese company. I think I said that right, Taiwanese, right? So something to think about. You got to be thinking about all these little things. Listen, most of us don't realize, but Taiwan, what we call Taiwan, is not even really its official name. The official name of Taiwan is the Republic of China. It's just an island separated by some water from China, and China has been, Taiwan's been governed independently, right, since I think the late 1940s or 50s or something, right? But these tensions have escalated as China wants more control over Taiwan, and it recognizes Taiwan as like a province of China, and Taiwan recognizes itself as being sort of independent. Lots of tensions. And in terms of why this matters to us as investors is because Taiwan holds two of the world's largest semiconductor producing manufacturers, or what they call foundries. Okay. So this is what we, on the news that we heard from Biden and Trump. And I want you to notice something. Most of the headlines about this today, they they didn't mention both presidents. They only mentioned one, which I thought was interesting. So, for example, let me share this with you here. I'll share this with you. See, that's why you always got to be careful what you read, what you see, what you look at, right? But this particular headline right here, which is similar, it said, if I can find it, is that it? Yep. Global chip stocks from Nvidia to ASML fall on geopolitics. Trump comments, right? So this is a Biden thing and a Trump thing. But the point is this: both of these future potential presidents, whichever one is going to be president, they're looking at tighter restrictions, tighter restrictions. And so the market reacted to that today, right? The market had a reaction and it went down. All right. So as investors, we have to know that. That's one reason why we see this dip in some of these semiconductor companies, or even semiconductor, not just companies, but semiconductor ETFs, right? Some of those are going to face some hits too, as this thing kind of shakes out. And of course, as we get closer and closer to election time, who's going to be the president? But all you got to know is that both of them are looking at tighter restrictions, right? Very important to note, guys. So let's talk about the other reason. So that's one reason why we see tech taking a hit. Tech taking a hit. Everything taking a nosedive. That's one reason. But the other reason that I want to talk about real briefly, guys, is this rotation sort of out of big tech, right? The rotation. Let me see if I can't find the article I want to wrap to you guys about that. Let's see here. There it is right there. This one's kind of small and hard to read, but I'll see if I can pull it up. Let me pull this one up from Market Watch real quick. I'm just trying to share these things with you. I'm just trying to make you aware as an investor, aware as a retail investor, what's happening and why it's happening. And this is a warning, right? This is a warning. Here's the warning. This small cap stock market rally is remarkably strange. That's why it has further to run. This was a story today as well. Outsized performance by Russell 2000 driven by dramatic shift in investor sentiment. In other words, what's the shift in investor sentiment that all investors should be warned about? What's urgent? The shift out of big tech, Mag 7, you name them, right? Nvidia, Amazon, Apple, Microsoft, whatever. The shift out of big tech and the shift into small cap, right? What they call a sector rotation or rotation. See, tech can be cyclical. I don't know if anybody told you that before you put all your money or a lot of your money into Nvidia, but tech can be cyclical. And we have to know that it happens in cycles sometimes. It says investors can be forgiven for staring in awe at the scale of the rally in small cap stocks over the last 5 trading days. It's truly remarkable and unusual. And it's likely to continue, argued Nicholas, who's co-founder of DataTrek. First, just how much of an outlier is it? It's an 11.5% return over the last 5 days by the small cap benchmark called the Russell 2000, which is up to it has the 2,000 smallest stocks by market cap. Now, here it is right here. This is the chart. Small cap surge. Well, here's small cap, the Russell, trading at about 1947. Now, all of a sudden, in the last 5 days, it's up by $300. Whoa, huge. What's going on? Small cap has been taking a hit. These are small companies. And when I say small cap, I mean, total market capitalization, outstanding shares multiplied by share price. So these small companies haven't been doing well over the last 7, 8, 9, 10 years. Horrible. Not horrible, but not good, right? What's been carrying the S&P 500, especially in the last couple of years? Obviously, big tech, Mag 7. But now there's a shift taking place, right? And I'll keep reading here. Colas noted that since 1990, the Russell 2000 has averaged a 5-day gain of just 0.2%, tiny, with a standard deviation around the mean of 3 percentage points. The 11.5% rise over the last 5 days marks a 3 standard deviation move. That's, in other words, it's huge. It's tremendous. Out of the 8,700 trading days since 1990, there are only 32 instances, not including the move through Tuesday, of a 5-day Russell return of 10% or more. Did you get that? 32 instances in the last 8,700 trading days since 1990 where there's been a 5-day Russell return of 10% or more. That's how rare this rotation is that we're seeing. Says so far, so statistically rare, but there's more. The move is also a historic outlier. In 26 of those 32 past instances, the market was either coming off a major low or witnessing a bear market rally. In the other 6, the moves came after a blip in a broader bull market. All right. So this is rare what we're seeing with small caps in this rotation. So the Russell 2000 is therefore benefiting from a purely sentiment-led rotation of a magnitude markets have not seen since 1990. The move comes amid a stock market rally that had become increasingly narrow, dominated by small cohort of mega cap tech stocks, right? So the large cap has been killing the game. Now in the last week, you see a rotation happen and you see people kind of having a sentiment, a feeling, and leaving large cap, selling off, right? The mega cap focus made sense given a reluctance to bet on the timing of the Fed Reserve rate cuts, the potential for a U.S. economic slowdown, as well as uncertainty over the outcome of the U.S. presidential election. Listen, full stop right there. You guys got to understand that the stock market does not like uncertainty. Okay. So the uncertainty of this is why during if you compare presidential election years to non-presidential election years, presidential election years are usually down a little bit, slightly, in terms of the overall S&P 500 performance. When we're picking a president, it's down in that year. Now, previous to the year that we pick presidents, it's up 13, 14%, the S&P 500. So the uncertainty of not being able to understand who's going to be the next leader of the country, that adds to some trepidation and some down sentiment. So this is what we're seeing, this sentiment they're talking about. People have a feeling and they're kind of selling off some of their large mega cap big stuff, right? And they're moving to some of the small cap. And now you see small cap Russell 2000 doing a rotation and becoming the hot thing, right? Moreover, the fact that the Russell 2000 rally is both statistically and historically unusual tells us investor sentiment has shifted dramatically, and the move very likely has further to run. Something to think about. Remember, I don't like small cap. I have not liked small cap. I'd rather play with small cap. Has a little bit more room for volatility, right? Small cap, and I don't like a whole lot of volatility, so I don't really pay much attention to small cap. And a lot of people have it over the last 5 or 10 years, right? So just want to share that one with you guys as well. Just trying to give you this is urgent because I want you to pay attention to it. This is a warning for stocks, right? Major warning for stocks is big tech may not keep doing what it's doing. We've seen a sell-off. We've seen a drop. We've seen a crash in a lot of these larger tech companies in the last several days, and you need to be aware of it. Now, at the same time, you don't need to panic about it, right? That's not what we're saying. But these tech stocks are down, Nvidia is down. But listen, for us seasoned investors, or you as a seasoned investor, or you even as a beginning investor, this represents a time for you to possibly buy or to possibly get good companies that are still trending fundamentally well. And of course, we have some earnings reports coming up as well. And so this gives you an opportunity to say, wait a minute, Broadcom is down. Oh my goodness. Okay. Nvidia is down to 117 bucks. Great. Okay. And it gives you an opportunity to buy some things when they're low, right? So stock market rotation, it's where investments shift from, the one sector's doing great. Now another sector's going to do great, right? All types of economic conditions, market trends. There's lots of factors. economic cycles and so forth, right? But some of these sectors are cyclical. Technology often can be one that has been cyclical, right? So these are signals that's happening that you need to be aware of. And if you didn't watch the news today, great. I just caught you up on some of it, right? But you still got to do your own research and stuff, right? This does not preclude you from doing your own research. But sector rotation is what we see happening. So the question becomes for you guys, like, what do I do now? Right? Like, okay, I got the information. Okay, so what does that mean for me at this particular point? So let's talk about that real quick. But I'm trying to find something here. Give me 2 seconds, guys. Let's see here. We already did that. Let's do that. Boom, boom, boom. All right. So, what's it mean for you? Let me actually go to the chat. Guys, hit the thumbs up button for me. I haven't even talked about the thumbs up. I just jump right in if you guys don't mind. Hit the thumbs up button for me, right? Do me that favor. That's solid. And tap that. Check out my partner, Mint Mobile, down below. Premium wireless services. 15 minutes to transfer your phone to Mint Mobile. You've seen the commercials with who's the guy? Ryan, somebody in there. Solid company, solid customer service. They don't have stores. Everything's online. So they cut out the middleman, makes them more affordable, right? They don't have to have big box stores. 24 Laws of Money free ebook is also in the description box below here on YouTube. If you're not on YouTube, come on over there and grab it. And there's some other free stuff down there. You can peruse that and check it out. It's a great word right there. Peruse. You guys got to throw that one in there sometime. Let's see here. Let me run to the chat. Give me a second here. Boom, boom. Just got that. All right. So Mrs. Moore's in the house. Good to have you, Mrs. Moore. Thank you so much for being here and your support there. I'm wondering if TSMC will speed up the foundries they're building outside Taiwan. Yeah, that's another Willie Weil. That's an excellent point. Willie Weil. So what TSMC is doing, obviously, they're trying to kind of bulletproof themselves from being secluded and under the whim of China, right? So what Taiwan or TSMC is doing is, how do we go ahead and think strategically as a company and make sure that we can build companies outside of that general, China, 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 and we can do our own thing and we can still grow. So they're looking at ways to do that, and I admire that company for that as well. So thank you for bringing that up. But China, I think I read today that China had mandated like 30 years. See, China is one of those countries that they have like 50-year plans and 75-year plans and 150-year plans, right? They had mandated somewhere in their, I don't know if their constitution, I don't want to say the wrong thing, but they had mandated where they're going to take over Taiwan by 2049. That was in their plans. So, but it looks like, those plans are becoming rushed ahead of schedule, and they've made measures in the last, like, 2 or 3 years ago. You remember when they were doing some testing right on the border towards Taiwan. It was a big issue because we thought that China was going to go in and invade Taiwan here in America. Listen, if China invades Taiwan today, if they invade them today, we're in trouble because TSMC is providing chips for huge major companies throughout the world. Some of the companies we use every day that we're using right here, right? Google and all they're providing chips for these big, large Mag 7 companies. So if Taiwan shut down today or all of a sudden became in control, total control by China, we'd all have a problem. The price of everything would skyrocket. And this is what the two potential presidential candidates are saying, that, okay, one, I think it was Trump, is saying, hey, we're providing you guys protection. Now, what are you giving us? Nothing. And then what Biden is saying was, hey, we're going to increase the tariffs for anything that you ship over to China because we're protecting you so we can kind of have that control over you. Anything you ship over there to perhaps our enemy, arch enemy, we're going to put some higher tariffs. So there's a lot going on. I want you guys to pay attention to that scenario in the news, right? When the news cycle comes around and you hear something about Taiwan, do your research, especially if you're heavy involved or heavy invested in these AI stocks that utilize semiconductors, right? Let's see. Somebody said, I bought Dell today, down 7% more lately. This is like when you walk into Nordstrom's rack, right? You couldn't get that. $150 shirt over at Nordstrom's, but you go over to Nordstrom's rack and that thing is sitting over there for $35, right? It may not be to that level at this point, but this is an opportunity where we see some down. But many folks are saying it's going to be down for a minute, right? And it may dip lower, right? Somebody said you'll save your 401k or a Roth or investment, go to 99. If you, let's see, I had a college buddy from Taiwan. He said people there are either really rich or really poor. Yeah, I don't know anything about Taiwan. I'm wondering if, let's see here. Let's see, hit the like button. Hit the like button, Miss V. Thank you, Mrs. V. Guys, tap that like button for me as we have this really, really important conversation. Hey, I want to talk about what we need to be doing right now. Right? I never want to give you this information, this major warning about stocks and what's going on with tech stocks and some of this problems that's happening that happened today or in the news, or you see things going down. I don't ever want to get rid of that or finish that up without giving you what we should be doing. Right? So I'll talk about that in just a minute. Let's see here. Telling you mess with Taiwan and you're done, Tom and Jerry said. Let's see here. Let's see. In law down 5%. Thanks for your, hey, you got it, Pete, Pistol Pete. Absolutely. My pleasure, man. Let's see. Trump and Biden going to have Nvidia and AI stocks on a roller coaster. Yeah, you could be right about that. You really could, right? The thing is the reliance on Taiwan. This is the beauty of whenever your country or whoever you are making yourself so valuable, such as they've made themselves in the semiconductor space. It's very, very valuable. I thought this Asian tiger was an independent country. Didn't know China. China has control, they call themselves independent. Let me pull this up and see if I can pull it up here. Is Taiwan part of China? Beijing asserts that there is only one China. That's what China says. And that Taiwan is a part of it. It views the People's Republic of China, and I'm reading here, views the People's Republic of China as the only legitimate government of China, right? An approach it calls the One China principle. Beijing claims that Taiwan is bound by an understanding known as the 1992 consensus. But it says Taiwan's KMT drafted constitution continues to recognize China, Mongolia, Taiwan, Tibet, and South China Sea as part of the Republic of China. The KMT, their ruling power or whatever, does not support Taiwan's independence and has consistently calls for closer ties with Beijing. So that's one faction of them. The KMT, though, has a rival party, the Democratic Progressive Party, what they call the DPP in Taiwan. And that party has never endorsed the understanding laid out in that 1992 consensus treaty or whatever it was, right? So you got these two people fighting, two parties in Taiwan. The ruling party says, we don't recognize that we're part of them. The other party says, yes, we're part of them. So without going too deep into Taiwan politics, just know that China wants to control Taiwan. Why do they want to control them? Military reasons, semiconductor reason. It's the same reason why, and it's not the exact same reason, but it's a similar concept of why Saudi Arabia and the OPEC countries, they want to control the oil because it's their oil and they think it's a part of their oil and they want to be in control of what they do and control of the supply of the oil. So they created OPEC Plus, which makes them control the oil from their own land. And China is saying, we want to control Taiwan because Taiwan is a part of China. And then we will have access and have rule or control over the semiconductor space. And America saying, no, no, no. We don't want you to have control over the semiconductor space because now you have access to half the world's computer systems. And there's a lot going on. All right. A lot going on. So, but this is why this is one of the reasons we see tech stocks or our semiconductor specific stocks seeing a dip today, today specifically because of the remarks that were just made by the two potential presidential candidates here in America, right? The other reason that we see some tech stocks losing is because people are rotating out of it, rotating back to small cap, right? The more volatile small cap. So my job is to say, look, guys, this is what's happening. If you've seen a dip, now how do you take advantage of that dip? Let's see here. 106, I'm selling my house and all in on Nvidia, said Kenneth. No, Kenneth, don't do that. 106. Let's see how tomorrow plays out. It dipped down to 117 today. Let's see how tomorrow plays out and see if there's a further sell-off, or let's see if there's further, down sentiment for AI stocks, Nvidia, Broadcom, et cetera. But these things are on sale. Let's see. TSMC is building in the US though. Yeah, I think TSMC is building. Let me just pull that up real quick and I'll see. Let's see what I got here. Phoenix. Let's see. Phoenix came up. Is TSMC building factories? Also announced plans to build a third fab at TMC in Arizona. So the third fab, they got two in Taiwan already. Let's see, more than 65 billion. Yeah, they're looking to build. Looks like in Arizona, right? TSMC is looking to build in Arizona. When will that plant be ready? If you guys know, let me know. It's scheduled timeline late 2024 or 2025, citing a lack of specialized labor. The project also has dealt with delays due to COVID-19 surges and licensing issues in the last few months. So it's delayed its opening, but they're looking to build in Arizona. Great question. Glad you asked that. I think somebody mentioned that earlier too. Get in on the dips and get into ETFs. Look, ETFs is my thing, right? Love ETFs. Love index funds. Obviously, you hedge a little bit of your risk by owning these tech and AI stocks in ETFs, not semiconductor ETFs, right? But actual large, broad ETFs like the S&P 500 and some others, right? Maybe MGK if you're over on Vanguard, or I think Vanguard has VGT. Some of those ETFs might be a good place to be parked or to be dollar cost averaging into, as opposed to the single stocks. And listen, if you have these stocks in ETFs, broad-based ETFs like the index, like the S&P 500, you don't have to be so, I don't want to use the word worried, but you don't have to be so, you don't have to think about this stuff so much, right? But if you own them individually, this is when all these things come into greater play, right? Let's see here. Open after market. Let me grab some Wawa here. Said, let's see here. I think Micron is building a new facility. Perhaps. So, here's what we got to do as investors. Let's break this thing down to our responsibility. Whether we're ETFs, whether we're individual stocks, we have to just not first and foremost stick to our plan, right? There's going to be some geopolitical turmoil going on and affecting the market. It's not often that you see political activities affecting the market, right? That's not a really common thing in this space. Because of the remarks of the two potential candidates, it had more of an impact than it normally has, right? Also because of the sector that we're talking about. We're talking about semiconductors, and the semiconductor space is ginormous for everyday life, right? Whether you're in a hospital, working in a hospital, whether you work in the federal government, whether you work in, the tech world, whether you work at Walmart, wherever you work, that semiconductors and technology and all that matters a lot, right? We don't think about it because it's so much a part of our everyday life, but it matters, right? And so now when you get these two potential presidents who are making comments about not only a sector of the AI space, but also sort of political things, because again, Taiwan and China are tied together. And we've had these issues with China for the last couple of years, where we're trying to limit the amount of activity that we do with China, whether it's federal government contracting, whether it's the technology space, whatever it may be. We're trying to, and then you talk about the potential President Trump, who constantly talks about, or at least he said, I've heard him say a few times, about trade, the unfair trade agreements and tariffs and all that good stuff. So all of that will come into play with these individual tech stocks, and we might see shifts in them whenever these comments are made. but stick with your plan, right? Stick with your plan your plan that tells how long you're going to be investing, the type of investment you're making, your risk tolerance level, how you plan to invest, what you plan to invest in, your values, your strategies, your core beliefs, all those things. Stick to your plan. Don't get frazzled and thrown off when you see some of these geopolitical things happen. They're going to happen more the closer we get to election in November, right? No need to fret. Let's see. As long as the CEO keeps selling some of his shares every week, the stock is going to stay below 124. BJM, those sales of shares are delineated long ahead of time. I think last year when those sales of shares for Nvidia were figured out, right? SEC mandates that you got to fill out a certain form if you're an owner or you're a part of the executive team of a large company and you want to sell, you have to sell at specific times in the future. So all those things are kind of already laid out. But you're right. It could stay below 124. That's for sure. Let's see here. Somebody said, "Yeah, I'm getting ETFs. Fantastic." As let's see here. Didn't Intel just build their foundry in Phoenix too? I'm not sure. Good question, Brian. Somebody else might have the answer to that. Not sure if Intel has just built a semiconductor foundry, and they call them foundries, right? That's just the manufacturing plant where they actually create and make these semiconductors. Let's see here. Okay, let's see. LRCX might be a good buy if the tech market goes green again. Not familiar with them. I bought in without a plan other than make money. Yeah. I bought in with a plan other than without a plan other than make money. I don't even know what a good plan would be. I've made some emotional choices in the last couple months. Listen, great question. Thank you for your transparency. Um, this is where you got to be careful, though. This is where you got to be careful. You want to, okay, if you want to be a good, solid investor, you have to go against your natural inclinations, your feelings, and your natural emotions. You have to go against those things because if you are an emotional investor, you're going to be an emotional seller, and then you're going to be an emotional buyer, and you're going to be an emotional wreck is what you're going to ultimately be if you're an emotional investor in the stock market, especially if you're buying individual stocks. So to ease, if you know that you're an emotional investor and you can't get away from it, you should be the person that's investing in ETFs and index funds. And don't look at it don't check it every 3 weeks, every month, and dollar cost average in, right? If you know that you cannot stay away from being emotional, that's how you should be investing in the stock market. You shouldn't be trying to pick and choose and gamble on one or two or three or four stocks. No, that's not the thing. Because in order to be a good, solid, what we call an intelligent investor, shout out to Ben Graham, right? An intelligent investor, you've got to take the emotion and put it outside the door at the beginning of the day. Take it, put it in a little box, put it on the back doorstep, pick it up later on about 9 o'clock at night if you want to, or leave it out there for a month until you check your stocks, your information again. Do not use emotion. What's up, Jay? How you doing? Good to have you here. Let's see here. So that's my shout out to you. You need to go ahead and make sure you go ahead and leave the emotion out of it. You need to go against what your natural inclination is to do. Go against that, right? Let's see. I bought small stock and I'm up. Fantastic, Jay. Let's see. Yes, Corey. Yes, take the emotion. No emo. No, 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 no. It's all got to be rationale. Rationale. Let's see here. Z's. Let's see. Check out. Boom, boom. That's me. Good. I made some good buys originally, but let the emotions get the better of me and chopped and changed. Now I'm in a not an amazing spot. Yep. You got to be careful. My suggestion again is ETFs, index funds. Corey said I invest $20 a day in VU and 20 a day in SCHD. Not bad. Let's see here. As Gordon Gecko said, never get emotional. Now, your emotions, when you deal with money, listen, I don't care if you're writing a budget for your personal finance. When you're dealing with money, keep the emotion out of it because the emotion will cause you to make wrong financial decisions regularly. And wrong financial decisions on a consistent basis will lead to poor outcomes, literally poor outcomes. right? The outcome of you being poor. So you have to remove the emotion, think rationally, don't go with your first emotion, relax. If you find yourself hyped up, chill out, wait a day or two or three. If you find yourself angry, chill out, right? You find yourself happy, get rid of all that stuff, right? So the first thing that you got to do right now, guys, is you have to stick with a plan. Somebody said, I think he said, the person that responded said, I don't even know what a plan is. A plan don't have to look like a certain way. It don't have to be. You can get you out a napkin, get you out a piece of notebook paper, and start writing down how much time do you want to invest this money? When do you plan to get it and use it and need it, right? What types of investments do you want to invest in? List them. I know about health. I know about hotels and restaurants. I know about what I know about manufacturing plants because I work in a warehouse. I know about what do you know about, right? What the types of things that you want to invest in. You write down what your risk tolerance level is, write down how much you plan to invest, write down how often you plan to dollar cost average into that investment. And then write down at the top of all that, write down your values, your strategy, your core beliefs about business and about investing, right? Boom, you have a plan. That's your plan right there. Boom, boom, boom. Right now, you can tweak it, change it, hone it, move it, shift it. It's yours. You do what you want to do with it. Right. But then you make decisions based on the plan that did not have any emotion to it. So when you're doing a plan, you're not hyped. You're not sad. You're not angry. Right. You're not PO'd at somebody. You're doing a plan in a rational space. Now, instead of investing out of emotion, you take your plan that's in front of you and you see, okay, does that match up to the types of investments I like? And so boom, 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 boom. It don't have to be fancy. It don't have to be a template. You can just create it, right? If you can write, you can listen, you ain't got to write. Maybe you can't write. You can go in and type, do it on a Excel spreadsheet, right? But that's how you do a plan for that person that didn't know how to do a plan, right? Do you recommend doing a bank loan to invest in the AI revolution? Riggs, that's going to be a colossal no. I don't recommend bank loans. I don't recommend loans on anything unless it's going up in value and you can't ensure enough that the AI revolution is going up in value at this point. So no, don't get a loan to invest in the stock market. That's my personal opinion. Somebody might think differently. Let's see. I think of investing is starting a small business. Your thoughts. So my thoughts is no, do not get a loan. Use the money that's left over after you've responsibly paid all your bills and you've gotten out of debt and you've got an emergency fund. Use that money to invest. After you've curbed your expenses, use that money to invest, right? Right. So that's my thoughts. Thanks. Good question, though. I appreciate that. Let's see here. Thank you for invest 20%. You're welcome. I invest 20% with my company's 401k match. Congratulations to you. Mutual funds and ETFs. I purchase individual stocks monthly for short gains. Amazon, Nvidia, Palantir. Excellent. Like the strategy. Fantastic. Make sure that strategy is written down. Let's see. I limped in on Nvidia even money at the moment. Okay, cool. You're good to go. Don't worry. It's a long play. AI stocks is a long play. It's not a short play, right? It's not a get in, at 130 today and sell tomorrow at 132. That's not what we're doing over here. We're talking about good, solid, long-term plays that you can hang with for 5 years, 10 years, 30 years, right? Somebody said, I think Broadcom is the perfect time to buy. Absolutely. Broadcom's dipped too. I don't think I brought it up earlier, but Broadcom has dipped as well. Excellent time perhaps to get in there. Fantastic. Okay. Appreciate you. Canada's in the house. Good to have you. I'm looking at Broadcom too. I'm starting a 100 a month in VU for me and 100 a month in QQQ for my son. What do you think? I think that's fine. I think that's fine. I'm waiting on this 20% drop they talking about. No, if this is long-term plays, don't wait on a drop. Stop timing the market. Do not time the market. Don't time the market. Don't time the market. Spend time in the market. Okay. Get in, dollar cost average, stay there. Don't say, oh, I'm waiting. I'm waiting. I'm trying to get in, right? What was that, right? This right here is what? Boom, boom. That's double Dutch, right? Remember that double Dutch? I wasn't no good at it, so I can get me a couple of jumps in, and I'm messing up the rope people, right? Who doing the rope, right? Don't time the market and jump in and jump out. Just get in, stay in, dollar cost average. So first thing you got to do is make sure you're following your plan. When you see the market dip and you see these tech stocks and you see Nvidia stock dip, you don't have to veer off your plan. The second thing is make sure you're dollar cost averaging so you don't miss the big upswings. I did a video about 3 weeks ago where I talked about the fact that if you miss the top 10 days in the stock market in the last 10 years, any 10-year given stretch, if you miss the top 10 days, then your average return on investment was almost cut in half just because you missed those big old ginormous swings because you're trying to jump in, jump out, jump in, jump out. Don't do that. Stay in the market. Keep dollar cost averaging, right? There's a certain level of superiority to dollar cost averaging. Here's what I like to say. Don't just dollar cost average, but do what I call dollar cost average plus, meaning that if you have some additional money, you're putting $100 a month in VU and $100 a month in QQQ. But if you have a little extra money and you see a dip, then you throw a little extra towards your dollar cost averaging so you can buy those shares at lower prices if you believe that that company or that ETF still has good fundamentals. That way you're buying undervalued companies. You're buying Nvidia today. If you buy Nvidia, let's say in the next day or two, and it's down to 116, 115, you're buying a company at 116 to 115 that by mid-August, late August, as we get closer to their earnings report, they're likely going to go up. They're likely going to go up. You're going to see some more folks jump on the bandwagon as it goes up. So this is an opportunity. So you see dips in the market as opportunities, not as a problem, not as a bad thing. You see those dips as opportunities, right? So continue to dollar cost average is my suggestion to you as my urgent major warning for stocks. Nvidia being one of the ones that are sort of like looks like they're crashing, right? But this is the reason, but this is what you got to do. Of course, as always, invest in what you understand. If you don't know anything about AI semiconductors, don't just follow the bandwagon. There is absolutely nothing wrong. Let me say this point blank. I hope you guys can take this to the bank. There's absolutely nothing wrong with what's called value investing as opposed to growth investing. Value ETFs and value stocks as opposed to growth ETFs and growth stocks, right? Value ETFs and value stocks are those stable companies, right? Those, you name them, Procter and Gamble's, Eli Whitney's, Walmart's, whatever, AT&T, those stable companies. And I know people nowadays, a lot of people hate those companies. They hate those value companies. What some people call them dinosaurs, right? But there's nothing wrong with a dinosaur as long as it's giving you a consistent 6% return. It may not get you the 30% return in 1 year that you really like, but it also won't give you that 30% drop in 1 year too. So don't get caught up in the hype thinking that you got to go out and make a 20% ROI in the next 6 months, right? That would be emotional, right? So be very careful about that. And then of course, like somebody also said earlier, hey, only invest what you can afford to lose. Lose. Don't take the rent money and put it in AI stocks, right? I know you're probably saying, well, that's obvious, but that ain't so obvious. You'd be surprised at what people do to try to make a faster buck, right? There are people who took everything they have and own and threw it into Nvidia 2 months ago. That's not a smart move. You're adding undue risk because of your irrational exuberance, right? You're too hyped up and too emotional. Be careful about that. And also diversify. I cannot say it enough. Do not put all your money in 2 individual stocks. Now, if you want to put all your money in one ETF, I'm okay with that because one ETF has 80 stocks in it, has 800 stocks in it, right? And there's less volatility in an ETF or an index fund, right? So if you only are invested in QQQ and VOO, I'm okay with that. VOO's got 500 something stocks. I'm not sure what's in QQQ, but you're fine. That's diversification. One ETF or more, one index fund or more. But one stock is playing it way too risky. Having all your money in eight, in listen, in my opinion, having all your money only in the Mag 7 is risky, too risky. Think about the people that threw all their money in the top five tech stocks: Amazon, Google, Alphabet, Meta, what else? Nvidia, Microsoft. Somebody threw all their money in those five stocks. As we see this rotation from AI stocks to now small cap, guess what? What are you going to do? Right now, you're going to be back to, getting a 7%, 5%, and not knowing you could get more, you could get less. There's a lot of, you're taking a lot of risk, and I want to reduce risk, right? I don't want to reduce risk enough to the point where I'm only investing in CDs, money market accounts, and US treasuries, right? I don't want to get a 1% return, but I also don't want to expose myself to having 20% return or 20% loss because I only got three stocks. So be very careful. Diversification is huge. Not just diversify in stocks, but diversify in your investments too. Don't forget about real estate. Don't forget about some other places where you can also invest besides the stock market, right? And I'm giving you guys a lot because I really want you to watch out for some of these quick dips that we saw in the tech space recently, right? It might come up, but it might dip further. We don't know where the bottom is, right? But I also want you to understand that these are buying opportunities. You just walked into Walmart and they got that, what do they call it? An end cap sitting over there with AAA batteries and AA batteries for 99 cents each, or 99 cents a package. When really them things are like what, 5, 6, 10, 15, $20 a package. Now you can get a package for 99 cents. Go grab them. Go grab some, right? Or at least if you're dollar cost averaging, keep grabbing the same amount you would normally grab, right? Don't switch up. Don't change up. All right. Let's go back to the chat. Sometimes, guys, I get to roll and don't think about the chat. I apologize about that. Let's see here. Agree, Jay. Man, I lost. Yeah, that's good. Good, Jimbo. Jimbo Slice. That kind of like Jumbo Slice, the fighter out there. So Jimbo Slice. Let's see here. Find your comfort zone and just DCA. I like that, BJM. Good advice. I'm currently in the air mobility space. Good. Joby is where I have the most share, small caps and speculative stocks. You have to be disciplined and definitely remove emotion. Yeah, you do, because small caps are a little more volatile. They're a little more volatile. Keep that in mind if you're thinking about looking into some small caps. Let's see here. Also, can't stop looking at the stocks. Drives me crazy. Maybe I should just throw my money into a high yield term deposit. Hey, look for you a good solid ETF, and I think you'll be better off. Think of it as long term. Absolutely. Let's see. Okay, some of you guys were answering for me. I appreciate that. Man, we got a solid group up in this chat. This is one of the most intelligent chats that I can think of. Man, you guys are smart. You're giving out great information to help each other. I really appreciate that. Somebody said, how about Tesla? I haven't looked at Tesla in a while. Where is Tesla right now? What did they get hit with today? Let's look. I'll pull their stock up real quick. At 248, 248.50. And let's see, over a 6-month period, we've seen some lull in Tesla, and we've seen Tesla kind of go up. They went all the way down in the last 6 months to $142 per share back early, like in April or so. But now they're back up to 248. That's a lot of volatility. One of the reasons I don't buy Tesla, and this is just me personally, guys, I'm not a big fan of the owner. I don't like owners. I don't like owners of companies being out front. I don't like who's the guy that owns the Dallas Mavericks, right? What's the guy's name? The guy that owns the Dallas. You guys help me out with him. I don't need the owner sitting down on the bench during the game, right? I just don't need that, right? I don't need the owner of any company always out front and having everything to be out front and be about themselves. Stay in the back. Let the market work itself out. Your stock, your company, your team, they don't need you to be out front. Well, that's okay. We got you. Mark Cuban is his name, right? Always out front on the bench, giving people five, right? Jumping for joy at every made free throw. Like, calm down, bro. Relax. But Tesla's the same way. I'm not a big Tesla guy. I don't like the way their products look. So because of that, I'm not an investor. They don't line up with my core beliefs and values in terms of my investing strategy. Now, some of you like them. Some of you think they're solid, they're good. They play in a lot of different spaces. They're trying to anything that's getting going. Elon Musk is going to try to get going on it, right? So he's going to try to do all that stuff, and that's cool. Nothing wrong with that, but it's just not my cup of tea. But yeah, Tesla's trading at 248.50 year over year. This time last year, they were trading a little higher because they were a part of the Mag 7, right? So they've had good runs, had bad runs. There's a lot of volatility with that stock. So not necessarily my cup of tea personally, but if it's yours, cool. I'm not mad at you, right? Let's see. I said CMG is going lower, which should go to $49 or lower. CMG is Chipotle. I did put out a boom, boom, boom. Let's see. Rental properties are a headache. Listen, truth seeker, who are you telling? Rental properties are a headache. I totally agree with that. But solid investment. If you have a strategy and a plan and you can follow your plan, I'm like the plan king, right? I have a plan for all this stuff. So, after a while, rental properties aren't really a headache because you get better at it and you know what to do, what not to do, and you get in the system and you get in a flow when you have rental properties. If you have enough of them and you have them long enough. Let's see. SMH is a semiconductor ETF. It's up over 50% in 2024. There can be an awesome ETFs. Yes, SMH is an ETF. Be careful though, because as we see this rotation and as we see the turbulence that's happening in with the political stuff going on, those semiconductor ETFs like SMH could feel a hit. So just be careful about that. Guys, don't forget to get the likes up. Thank you, Mrs. Moore. I appreciate it. Get the likes up. Do me a small favor. Just do me a solid one and tap that like button real quick. Just tap it for me. I really would appreciate it, guys. Also, check out below. We got some free stuff in the description box. Check that out as well. Let's see. Somebody said the market's crashing. Sell everything. Let's see here. No, you're all right, Mr. Cigars. You're fine. You're fine for now. Let's see here. CMG is still too high, 45 or lower, but you can always DCA. Absolutely. You can always dollar cost average into a stock like CMG. I really like CMG. They're on my watch list for sure. I'm thinking about buying them very shortly here. But we'll see. As things come down and I have some money to play with, I'm going to make some decisions here shortly on our other deal. I'll talk a lot about that over there as we put up more videos on that membership site. There's a link to that below as well. Let's see. Nvidia could fall to $90. Michael Anthony, Nvidia at $90. Guys, let me know. Would you be in on Nvidia at $90? I think that would probably be a consensus of yes. Most people probably will. Yep. So yeah, we like it to go lower. And it's time to go shopping. If you are an investor, and this is the major warning is for stocks and for Nvidia stocks that are crashing or going down and tech stocks that are going down. This is buying season for you if you're invested in individual stocks. Excuse me. So you'll dollar cost average, but you'll also do some investing as well. Dollar cost average plus, right? Let's see here. Somebody said used to like Tesla. Alvira said Huang sold a huge amount of stock and killed the momentum behind the scenes. He didn't. So Fat Wong, let me just see. He didn't really. Those were planned sell-offs, right? Planned sell-offs, right? So you got to know that those are planned sell-offs, planned ahead of time, and it's not really the planned sell-offs, right, that really affected. I don't believe. So be careful about that. SoFi can double from here. It's a steal. Mark Cuban. Yeah, that's the guy. Mark Cuban. Go sit in the box of booth, man. Right? Let's see here. Before the split, let's see here. So Nvidia at $90 is like Christmas. Right. It would be, because remember, the fundamentals haven't changed. So again, the other thing I want to point out to you guys is no matter what you do, no matter what happens, do not panic. Do not panic. Do your due diligence. Thoroughly understand these outside market forces that I just mentioned. I talked about Taiwan and the tension between China and Taiwan, and how that tension could have an effect on the semiconductor space, right? On the AI space, for that matter, right? So when you're looking into buying these individual stocks that are involved in the tech industry, there's some geopolitical things that will affect it. Also, we have an election coming up. As the election gets nearer and nearer, anything that can be said by either of those two candidates could make a dent in the stock market or a particular sector like it did today in the semiconductor space, right? But just remember, guys, the market has always bounced back. Dips are buying opportunities, right? You don't lose money until you sell. Don't get in a panic and then you buy high and you sell low and you make the cardinal mistake that a lot of investors do when they're emotional about investing, right? But always see these market crashes or these down plays as opportunities for you to invest. Okay. So, hey, guys, I'm not going to hold you. I appreciate you being here. Thank you. Thank you. Thank you. You guys have made this chat lively. And most of all, here's what I like about it most. You guys have made the chat informational. And that's really important because, hey, I don't know it all. You guys have a lot of information. You know about certain REITs and certain ETFs that you invest in. And I appreciate you sharing that information with the entire chat, right? Just sharing that information because we all can learn from each other. And that's really what this channel is all about. This channel is not about, hey, let's check out Smart Money Bro because he's going to tell us exactly what to invest in. No, I'm going to tell you I'm going to give you some things to think about, some things to consider as you do your research and you do your own due diligence, right? Some information and hopefully some help in making certain decisions. But I'm not going to tell you what to invest in because this is not investing advice. This is information, right? So that's all we're about here. So guys, don't forget to check out the description box below for free information to the link to our other membership site where we've already done a few videos. We're going to do more videos that go behind the scenes and you guys over there are going to help me invest more into single stocks, right? Because full disclosure, I got rid of a bunch of stocks so I could really go over there and start from scratch and fresh with you guys. And you guys will have access to the amount of money that I'm investing, exactly what I'm investing in, why I'm investing in it, what is my strategy, what is my core values, core beliefs, what is my time frames. We're going to dig all into that stuff specifically, right? And we've got a few videos over there that we've done for paid members only, but we're going to do more, but we're gathering folks right now. So there's a link to that in the description box here on YouTube for that. Please check it out. And I know some of you are over there already. I appreciate you for doing that. And we'll get going more over there as our numbers kind of swell a little bit more, right? We've got over 300 and something people over there, but we only got about 30 or 40 maybe paid members, a lot of free members, and that's okay, right? Because you'll get behind the scenes and information over there as a free member as well. But as a paid member, you'll get a little more. So we got free stuff in the description box below. Check that out. Go check out smartmoneybro.com for more information. Check out our other videos on here. And hey, drop me a comment if you watch this on replay. If you want to watch what we talked about in terms of what you should be, the warning for stocks and Nvidia's crash and other tech stocks crash, rewind this thing back to the beginning. Listen, I appreciate you guys more than you know. Thank you so much for hanging out with me. We're going to be back on here tomorrow night, same time, same place, on another issue that I think is really important. I've just started kind of thinking about this, and we're going to have this really candid conversation tomorrow, same time, same place. So again, hit the like button on your way out if you haven't already done it. Thank you so much for being here, guys. Art of War, Validated, Jay, ZZiz, Sunset on the Ocean, BJM, Mrs. Moore. Appreciate you, Mrs. Moore. The Willie Wilo, Evan, Fat, D Maha, you name it. We're all over the place. All right, guys. Appreciate you being here. And as I always say, guys, the best person who's going to take care of the old you is the young you. Take good care of yourself and take care of other people. Until the next video, peace.